Hi everyone, welcome to another video by Optionables. My name is Saket and today in this video we are going to look at the weekly market summary. It had been quite some time since we made our last video, so we also thought of changing how we present to our YouTube audience. So instead of making the daily video where we give the market summary and also what happened to our trade and the market outlook, we thought of doing things little differently. So the idea is that every day morning we'll be updating on our website what is the outlook we have for the day. So this will be based on technicals. So you can go to optionables.in/blog and you can check out the daily market report which will be updated before the market opens. On YouTube, we also thought we'll be coming once a week where we are going to give you a complete summary of what happened throughout the week. So we are going to discuss how was the trade throughout the week, which day was the hardest, which day was the easiest, how did we end up trading on the easiest day and how did we end up trading on the hardest day, what was the lesson that we learned during this week. So we'll be discussing everything and giving you a complete summary of the week. And not just that, we'll also be giving you the trade idea and also the market outlook, what we have for the next week. By this way, we thought the effectiveness of the content what we provide will be much more. So I would request you to watch this entire video and let us know your feedback down in the comment section below, whether such weekly summary where we discuss about the trades, where we discuss about the learnings and where we discuss about the outlook, whether this is going to be much beneficial than the daily videos or not. So this is a new try and we would definitely love to know your views and do let us know in the comment section below. So before moving on with the video, so there are a couple of more things which I would like to tell you. So the first thing is regarding the Target app. So on August 1st, 2022, we released the first beta version of Target. After we released our first version, there were a lot of bugs which came up and this was as expected because first time we are getting into the market and the product is very new, so there are some bugs which you can expect. So we started fixing all the bugs and by 15th we had a stable product ready. So the thing is, post 15th we have gone to the second version of beta testing of Target. So this version will be very exclusive to people who drop in a mail to support@optionables.in. So not everybody will be getting the access of the second beta version. So whoever drops in a mail to support@optionables.in, we will be giving a separate link for your beta version testing. And now most of the bugs are fixed and we are now moving towards a stable version of Optionables Target. So we are very soon expected to release the first stable version of Target on target.optionables.in itself. And I would also like to thank you all for your valuable feedback and also continuously dropping us a mail if you find any bug. So this has helped us quite a lot to fasten the entire process, and also your feedback was so much valuable that now most of the bugs what the app had initially, everything is fixed. Now everything is working fine. So you can also drop in the mail, and I would again want to thank you from bottom of my heart for showing so much support. Our goal is to provide top class products and serve you. In this journey, we would definitely need your help because even we are starting from scratch and even we have very little experience in this field. So every input of yours will be extremely valuable and it will help all of us grow together, because at the end of the day, all we want to do is provide good products to traders in the market. Again, I would like to thank you all for showing so much support, and please do continue supporting us the same way. So now, before moving on to the weekly summary, I would also want to give a small update on one more thing, that is the Traders Conclave. So Traders Conclave, which is happening in September, so I am one of the speakers of Traders Conclave and you can definitely go and check it out. We would have put a link in the description below. So totally there will be 9 speakers and 50 plus mentors in this event. And the thing is, this is an offline event, a 3-day residential event. So you can definitely check more details out there on the website. So I'll be one of the speakers, Sujit will be one of the mentors. So you can check it out on the website. And also by using the link in the description below, you will be getting 10,000 off on the registrations. If you are interested, definitely check it out and also let us know in the comment section if you have any suggestions for this event. And now let's quickly move on to the weekly market summary and we'll discuss about what is happening. So this week started with a holiday because Monday was a holiday on the account of Independence Day, and we had only 4 trading sessions. And the thing is, this week the markets ended completely flat. The Bank Nifty was also flat, Nifty was also flat, so hardly around 0.1 or 0.2% up and down. So So when you look at the overall market, so even though the markets have ended flat on close to close basis, so there was a lot of volatility because Tuesday, Wednesday, Thursday the market ended up going higher, and on Friday markets ended up crashing almost around 1.2%. So overall we have closed the week completely flat. So now you can look at our performance on the screen. As you can see, on Tuesday, Wednesday and Thursday we made some good profits, but on Friday we ended up losing quite a lot. And this is mainly because of futures. So even from options, even though we didn't lose a lot, some futures we ended up losing close to around 7 lakh on Friday alone. So now I'll be discussing about the easiest day as well as the hardest day for trading this week. Easiest day to trade this week was Wednesday because markets opened with a slight gap up. Throughout the day, it consolidated between 39,300 to 39,500. Towards the end, it slightly started to go up, but relatively, I found it the easiest day to take a trade. The hardest day to trade this week was definitely Friday. So the reason is because it was completely against our view. We weren't expecting such a big crash. So given the fact that the market had run up so much, definitely we could have expected some correction, but I personally wasn't expecting that. So it came as a surprise, and it was pretty hard to adjust because whenever the market fell, I sort of expected there can be a small bounce back because FIIs are buying. So that didn't happen today. So the hardest day to trade this week was Friday. So now we'll be moving on to the screen recording, and we'll take a look at why exactly we felt Friday was hard, how was the movement on Friday, what trades we took, and how we ended up losing close to around 9 lakh. So 2 lakh from option trades and remaining 7 lakh from futures. So right over here we have the chart of 17th of May, and this is the day where we felt it was very easy to trade. So this was a Wednesday, and generally Wednesday and Thursday the theta decay will be very high. So on top of that, you can see that the market almost opened flat. So there was, even though there was a gap up, very quickly it came down and the market was almost trading flat. And not just that, throughout the day, there was no big movement in the market. So on Tuesday, we had carried a position 39,300 short straddle. So what happened on Wednesday, the market opened higher, but it came down towards 39,300 itself. It took some support and later bounced back. So while this bounce happened, we created one more short straddle at 39,400. Throughout the day, the market consolidated between 39,300 and 39,400. Only towards the end, we saw that the market broke 39,400 and started heading upside. From morning, almost up till 2 o'clock, we saw that the market consolidating in a very tight and a narrow range. And this was more than enough for us to get a very good theta decay. And as the market started to break the day's high, and the thing is, I was also expecting some kind of buying to come in. If you're seeing from the previous 2 weeks, you get to observe that especially during the last hour of trade, we get to see a lot of buying coming in from FIIs. So FIIs have been continuously buying, and there's a lot of buying coming in towards the end of the day. And that's the reason we were already anticipating an up move towards the end. And as anticipated, the market started to head upside. So what we did is we just cut off the 39,300 short straddle, and the markets went up but slowly started to come down. This 39,400 short straddle gave us a fantastic decay, and that's how we ended the trade. So there was nothing much done. It was a very flat day, very easy day to trade. So nothing much to worry about because there was no volatility. So on this day, we had a loss from futures, and 4 lakh whatever profit we made on Wednesday was mainly because of options. So it not just compensated for the loss from futures, but it also helped us gain extra. So here we come to Friday, that is today. So today was the hardest day to trade for us. So there are a couple of reasons why it was hard. That is because it went completely against our view. If something is in our view, or if it goes even slightly against the view, you can do something about it. But when it goes completely against your view, it is very hard to do anything. Right? So today, as you see, the markets opened quite high, almost at the highest point of the day. So somewhere around 39,750. The market started to slide down. So we had a 39,600 short straddle which we had carried from Thursday, and this was in a very good profit. So in the morning itself, we had a profit of close to around 1.4 or 1.5 lakh just because of this short straddle. So then the market consolidated for a while up until maybe around 11 o'clock. So it was giving us very good profit. Then the market started cracking down. So then immediately there was a huge sell-off which happened. So while the market fell, okay, I thought markets might find some kind of a support around 39,300, as you can see here. So the market had taken some good support, and I also believed this time we might end up finding some support at 39,300. So that's the reason I thought maybe from here we can see the market slowly moving like this, but that didn't happen. So while the market fell so much, we already started to go to a loss. I will tell you why. It was not just because of this 39,600 short straddle which we had carried yesterday. It was also because we had added additional quantity of 39,600 short straddle. So only if we had the initial quantity, that would be absolutely fine. But since we had added extra quantity, so now we had a lot of quantity of 39,600 short straddle. And while the market fell, so by here I had already lost all the profits and gone to a small loss as well. So then what ended up happening, and there was one small green candle which came in, but the market was not able to cross this level. Immediately we started to see one more round of sell-off happen. So by this time the M2M losses were increasing, so the M2M was bleeding. So it was high time that we cut off the put. So we cut off the 39,600 put options completely, right? And the market further fell. So now we only had the call option and the market started to fall. So post which the market further came down, and as it approached 39,000, we thought it might find some support here and consolidate. And so we already had 39,600 call option. And again, we were scared that what if FIs come towards the end, start buying, and we see a big V-shaped move, then our calls are going to bleed quite a lot and we are going to go to a loss. So what I rather decided is to go with 38,500 put option short. So we had 39,600 calls from here. So we added 38,500 puts. Thinking that the markets might consolidate, or even if there's a V-shaped move, that is still okay. We will at least recover the loss, whatever we have, right? So the market did bounce back. So then there was a green candle, and then there was some bit of consolidation which happened for 30 minutes. And then suddenly there was a big crackdown. And this crackdown hurt us quite a lot. And we finally exited all the position with a loss of around 2 lakh. So even though the overall loss is around 9 lakh, from options we just ended up losing 2 lakh. And it is good that we just cut down to 2 lakh because options the last week and this week overall have given us very good returns. If you only look at from the options perspective, we should be trading around positive of somewhere around 8 to 10 lakh from last week beginning. Right, so that's the reason we just cut it off at 2 lakh loss, because on the other side we were also bleeding with futures, so we didn't want the M2M to cross over 10 lakh and bleed quite a lot. So we just cut off all the trade. So this was today's trade, relatively a hard day because the view went wrong twice. So once it went wrong here, second it went wrong here. So both the times the view went wrong and we had to pay the price. But good thing, the one learning or the good thing is that we didn't end up paying a lot. So as I told you, you can see the relatively easy day, we ended up making close to around 5.5-6 lakh from options. On a relatively hard day, we ended up losing around 2 lakh from options. So the learning is that always try to keep consistent, and when you're losing, don't end up losing too much, because when you get a good day, so you will end up quite easily recovering as well as performing much better than what you had lost. So this is the learning and also one key takeaway from these two trading days. Coming to the market outlook for next week, what do we expect from the market next week? So I do expect some kind of support to come in at lower levels, and markets might consolidate and face some resistance at higher level also. Because today we saw, as soon as the market approached 18,000 and 40,000 in Bank Nifty, we saw strong profit booking happening, and Nifty came down almost around 1%, and even Bank Nifty fell close to around 1.5%. So that clearly shows that there is resistance at higher levels. And also, based on the price action what we have seen, we can definitely expect a lot of support at the lower levels. So that's the reason we don't know how exactly the markets might move, but based on the analysis of open interest and the charts, so we can take some simple trades. I'll also be discussing about the adjustments what we have in mind. So again, these are the trades which will be personally taking, so these are not recommendations. So I would ask you to consult your financial advisor before taking any of these trades or before following any of these trades, because again, these are not recommendations. So these are the trades which we will be taking, and it's only for educational purpose. Along with the trades, I'll also be discussing market outlook, where we'll be talking about some chart analysis and open interest analysis. Based on the data, we'll also try to establish the outlook for next week. So now we'll be quickly moving on to the video. So now let us come to the market outlook and a trade idea. So I have opened the daily chart of Nifty and Bank Nifty here. So as we can see, we had a fantastic rally starting from mid of June. So we have rallied almost close to 3000 points in just a matter of 2 months, right? So after this fantastic rally, so we saw a big red candle right over here. So the market went all the way from 15,200 to 18,000, and at 18,000 we started to see some kind of resistance. At 18,000 we saw a big sell-off. So if you look at the last week, so you can see the previous week close to this week close is almost at the same level. So that means now when we have to discuss about the market outlook for next week, so let us just look at the open interest ones and also what the chart is suggesting and discuss some trade ideas. So firstly, when I actually zoom out of the chart, so you can see I am particularly expecting the market to consolidate between 18,000 and 17,600. So why 17,600? You can see that the market opened gap down. Next day also it respected 17,600 and it came up. And here there are multiple resistances or multiple times when 18,000 was retested, but it was not able to break. So this can be clearly seen when I actually reduce the time frame. So you can see that 18,000 is a very good resistance. 17,600 is likely to act as a very good support. So these two are the high and low of the last 2 weeks, and I am hoping that the market might actually end up consolidating between this range itself. So I have particularly picked 17,600. When I come to weekly chart, zoom out and show you, you can quite clearly see that 17,600 had acted as a very good support multiple times and also resistance right over here. So it was psychologically a very important level which on a daily chart Nifty had respected, and you can see that from there it went on to 18,000 and it was not able to sustain 18,000. We can see a big shooting star getting formed right over here on the top. So not just that, you can see 18,000 again was a resistance multiple times. So it was not able to cross that, and we have seen some reversal take place. So even now, a reversal is not completely ruled out. There is always a possibility of Nifty retesting 17,600. And if Nifty is not able to hold 17,600, then we can expect a further crackdown. So till where can we expect the crackdown? So we will be easily retesting 17,400 to 17,500 levels if Nifty is not able to sustain 17,600. So that is going to be this particular zone. So what is more important is to see whether Nifty is respecting 17,600 and 18,000. If not, so we will also plan what exactly to be done. So right now, since we have established a basic idea that we are expecting some support at 17,600 and resistance at 18,000, let's also take a quick look at what the open interest have to say. So when I come to open interest front, so we can quite clearly see that there are lot more calls compared to puts. So there is heavy call rating at 18,000 and 17,900, and there is also some good amount of short straddles created at 17,800, right? So we have also established the fact where our support and resistances are, and this particular open interest at 18,000 further confirms that there is very strong resistance at higher levels. So given the fact that the market is at 17,750 and we have also seen some very strong call writing at higher levels, so I would be comfortable doing a 17,700 short straddle or even maybe 17,650 short straddle, because on the lower side we already saw that there is some good support at 17,600. If 17,600 is broken, then we might find some more support at 17,400 and 500 zone. So given that fact, so you can see that my downside here would be around 17,430, and on the upside, so we have already seen that very good resistance is there around 18,000, and this is going to come in slightly below 18,000. So for these two facts, so I would be quite comfortable doing a 17,650 or a 17,700 short straddle. So even 17,650 would be slightly okay given the amount of call writing what we have seen, and also there was a huge run up, so it won't come as a surprise even if we see some kind of profit booking. So this would give us a upside range of 17,928, which I would be pretty comfortable holding. So now, given this fact, the most important point is when do we adjust or what do we adjust. So very simple idea is that if we are breaking 18,000 or breaking 17,400, so I would maybe not hold this short straddle at all. So if we break this, I'm going to exit it at a loss. So there is no need to keep on adjusting the trade. So you can take a new trade, because the thing is, the adjustments vary depending on which day it crosses. So maybe if it is crossing on a Monday itself, you have some room for adjustments in the sense you can start shorting some additional calls or puts because they will have some premium left. But when you move towards Wednesday, so they won't be having any premiums, and Wednesday, Thursday, so it will be very hard to adjust. So that's the reason I would rather keep it simple by not planning to adjust, but cutting off the whole trade if we cross 18,000 or 17,400 on the downside. This would be one very nice idea to have, that is a short straddle at 17,650 or 17,700. This is something which we'll be taking depending on how the market opens on Monday. Again, I would recommend you to consult your financial advisor before taking any trades based on these suggestions. So now coming to Bank Nifty. So I have already put some line of resistance and support here. So this is again based on daily chart, and also when we go back in time, so you can see that I have marked 40,000 to be a very important level because of these right over here. We again tried to reach 40,000, but it was not possible and we started to come down. So on top of this, even the level of 38,500 is going to be very crucial because of two reasons mainly. So you can see that there is a big gap up here, and if we break below 38,500, most likely we'll be filling in the remaining gap of 200-300 points. So if we are not able to hold 38,500 or 38,600, very easily we'll be cracking towards 38,000 or 38,100. So that's the reason this level seems to be very important. And even when actually zoomed out and seen, so you can see that multiple times the market has faced some kind of a support or a resistance at this particular level. So these two are very important levels on the higher side and the lower side. So now speaking about support or resistance, so it would be somewhere around 38,500 all the way up till 40,000. Given this, we will also take a look at the open interest. So open interest here is quite clearly suggesting a lot of call writing, 40 million calls compared to 25 million puts, right? And you can see so this is one thing which I wanted to tell. If you have seen the open interest in the entire last week, it was always, the PCR ratio was always greater than 1. There was always more puts compared to calls. So again, after a long time, we have seen that now there are a lot more calls compared to puts. So we have seen good amount of short straddles at 39,000. So a good amount of call writing at 39,500, good amount of put writing at 38,000. So given these things, also the fact that Bank Nifty comes with very good premiums. So I would be here comfortable doing a 39,500 and a 38,000 short strangle. So this strangle is slightly bearish because I do expect the markets to find some kind of a resistance at higher levels. So that's the reason I would be happy by doing these strangles. So that's the reason I would be happy with these strangles, which is going to give me a range of 37,780 to 39,711. So the idea of adjustment here would be quite simple. So if in case we are moving down or up towards our break even, so then we can simply convert the other leg into a short straddle. So if we are coming down, let's say towards 38,000, let's say we start to fall. So we can simply short a 38,000 call option and convert this into a short straddle. So this whole leg will be into a short straddle. Similarly, if we start moving higher, right? So let's say we start moving towards 39,500, then just short a 39,500 put and convert this whole thing into a 39,500 short straddle. So this is a very simple adjustment idea what we can work with, because I am particularly expecting the markets to consolidate between 38,000 to 39,500. So I am slightly bearish because of the open interest what we have seen. There is huge amount of call writing, and also the market has run up quite a bit. So the world markets aren't supporting the same way. So it won't be a surprise even if we see some kind of fall coming, right? So these two are the trade ideas and also the market outlook. So to give you a broader picture of the market outlook, we do expect some kind of consolidation to happen and the markets to stay bullish over the medium term. So short term, we might see some kind of correction, the markets to consolidate, and then we might see one more round of up run happening. So this is my personal expectation. So I might be wrong. So the market might start to either correct or it might start to go up. Anything can happen in the market. But this is the idea right now we are working with. And again, we'll be pretty low on the position sizing and the quantity, so that even if something ends up happening, we can quite easily adjust, or in the worst case, we can also come out with a very small loss, right? So one thing you should note is, even in Nifty, I told you that if the market is crossing a particular level, just exit it. So don't have to adjust, right? So let me just come back to Nifty trade, because here we have spoken about an adjustment. So in Nifty trade, we didn't speak about any adjustments. So let me just come back to the Nifty trade. So let's say you do a 17,700 short straddle and the market tomorrow goes to 18,100. So let's just keep a hypothetical situation. So we spoke about market closing above 18,000. So then we'll be exiting. So let's say the market goes to 18,100. Then the total loss per lot will be 6,000 rupees, right? So market has opened, let's say 2% gap up around 18,200. Total loss is around 6,000 to 7,000 rupees. Sorry, the total loss would be somewhere around 7,000 rupees, right? You should size your position in such a way that this total loss into 2, that is 7,000 into 2 is 14,000, should be less than 3% of your capital. So where is 14,000? To lose 14,000, the markets should actually go up or gap up by 3%. So this 13,000 should be less than 3% of your total capital. So you can anywhere range it between 2 to 3% of your capital. So what position size I would be comfortable? So I would be very comfortable with a lot size of 50. So why 50? Because even if we let's say open around 18,100, we'll be losing 3.9 lakh, and double of that would be around 8 lakh. So even if we are opening 3% gap up, so that is not going to hurt us big, because we are going to lose 8 lakh of the capital. So overall capital is now around 6 crores, because thanks to the market going up, even this quarter performance has been quite good. So that's the reason overall capital has now increased towards 6 crores, and this would be around 1.5% of the capital in spite of a huge gap up. So this is something which we should be ready to bear, or keep this in mind, that if a black swan event happens, also if you are not able to cut it on time, you should know what is the kind of loss you will be suffering, right? So let's say the market ends above 18,000 tomorrow itself, we will be losing 1 lakh. So we would be more than happy to just cut it off at a loss of 1 lakh and close the trades. So this is a simple trade idea and market outlook for Monday. So today we saw an update on target, also on traders conclave, and we also shared how the week went and which was the hardest day and which was the easiest day to trade. We also shared some trade ideas and market outlook for next week. So I also want to know your review about this entire video. So whether do you like this more than the previous video what you were seeing, and also let us know some points to improve in this video, and also if you want to see this in any other format, you can definitely let us know in the comment section. Meanwhile, if you have liked the video in this format, do not forget to hit the like button, share this video, and also subscribe to Optionables, and don't forget to check out the blog every morning for the market outlook. Thank you so much for joining, guys, and see you soon in the next video.